called unhosted wallets. And the requirements that FinCEN came up with are sort of similar to what we use now for money transmitters. So, Mr. Armstrong and Mr. Allaire, your firms in particular were vocally opposed to that rulemaking. And I heard your responses to Mr. Foster and to others regarding identity. And I want to try to understand, can you share why the transactions involving virtual assets and payments involving those wallets that are quite similar to Western Union transmissions or MoneyGrams, why you objected to what looks like a fairly similar regulatory approach? Mr. Allaire, if you might take a crack at it.
Thank you, Congressman Lynch, for the question. It's a very important question. First, I would simply start by saying I think FinCEN has done an excellent job at looking at the issues of money laundering, terrorist financing in the context of virtual assets, virtual currencies. They led the way as the first federal regulator to, in fact, put in place rules around that back in 2013 that led firms like Circle, Coinbase, and many others here to put in place licensing, supervision around Bank Secrecy Act, anti-money laundering provisions, and the like. I think the specific issue at hand, which you are correct, we had some significant objections to, was really twofold. One was there was an introduction of a 11th hour rulemaking that did not have significant public comment. And I think at the bottom of that issue is there are some really significant things about the way digital assets and blockchains work that we want to make sure, if we're going to be introducing rules around reporting, that they take account of the unique things with public blockchain infrastructures in particular. Notably, public blockchain infrastructures are in some ways like the public internet or the World Wide Web or email. They're open networks that anyone can connect to, join, and use. And it's one of the really powerful things that has made information exchange free. And I think it's one of the things that we believe with digital assets on blockchains can make value exchange much more frictionless for people around the world. And a part of that is that there are, the ability for an individual to self-custody assets with a piece of hardware or a piece of software. That piece of software could be downloaded from an app store, and they're self-custodying a stablecoin like USDC or a Bitcoin. And that's the software maker itself is not involved in facilitating a customer transaction. They're really just a software developer providing technology that users can use. And I think the rule as it was outlined would kind of be a square peg, round hole, or a bit of a blunt force instrument. And what we argued, and I think is hopefully going to bear fruit significantly over the next year, is that what we really need are ways to provide proof of digital identities. A firm like Circle or a firm like FTX or Coinbase or Paxos or other members, other folks testifying here, could provide a cryptographic proof that someone has been KYC'd. And that proof could actually be carried around with them in a hardware wallet or a software wallet. And then you'd have the ability to know that you've got legitimate actors, to be able to have the right information about users, without having essentially more PII or personal identifiable information being broadcasted really broadly. And so I think our view was give the industry more time to develop technology that can allow these forms of transactions to happen, but still preserve privacy and take advantage of the really significant security benefits that come from cryptography.
Okay, that's fair. I know my time has expired, so thank you, Madam Chair. I yield back.
Thank you. The gentleman from Tennessee, Mr. Kustoff, is now recognized for 5 minutes.
I love these last names. It's so funny.
Thank you also for convening today's hearing. Thank you to the witnesses. I know we've been here for some time, but it's been very informative, and I appreciate it, and I know we all do. Ms. Haas, if I could with you, could we talk about the Crypto Rating Council that I believe Coinbase and other industry players created to determine what digital assets look more like securities and which ones don't? If you could Could you talk to me about how the council makes its determination and who's involved in the process?
Thank you for the question. So the Crypto Rating Council is an independent entity that works to serve industry participants such as Coinbase with an assessment of digital assets underneath the Howey test. So it's looking at the white papers that new asset projects put forth and making a determination under the Howey test whether or not that new project is more likely than not to meet the definition of a security under U.S. federal securities laws. Independent law firms are the ones who are doing this assessment, who are U.S. securities laws experts, and looking at facts and circumstances to make an assessment.
Thank you. If I could ask you, could you talked about securities, can you talk about what degree, if any, the SEC and other stakeholders have been involved in, what the discussions have been with in terms of the framework?
Thank you for the opportunity to address this. So at this point in time, the SEC has not provided a clear definition about what is or is not a security. They've asked us to rely on the Howey and Reeves test, and we, companies like Coinbase, companies like FTX and others, pay careful attention to ongoing litigation that is existing in the space, news that we see, but we are left to interpret based on our interpretation of law for what is and is not a security at this time.
Ryu, thank you.
Mr. Brooks, if I could to you, thank you also for being here. If I could, I think there are, obviously there are people who believe that cryptocurrency is difficult, maybe even impossible to track. Can you talk about that as it relates to the blockchain? And while we talk about illicit activities, alleged illicit activities, oftentimes would be investigated by federal authorities, could you explain maybe the fallacy in that as if you were talking to our local police chiefs or local sheriffs?
Sure. Well, thank you for the question, Mr. Kustoff. I actually do this talk at local Rotary clubs and things around the country all the time, so I think I can do that pretty well. I think the easiest way to understand it is let's contrast blockchain transactions with normal banking transactions to see how much easier it is to trace them on a blockchain than it is in a banking transaction. So let's imagine for a moment that I would never do this because this would be flagrantly illegal, but let's say I bought you lunch, okay? And let's say that afterwards you wanted to Venmo me your payment back, right? So you hit your Venmo button on your iPhone and you sent me money. What many people don't understand is that there are 7 or 8 different steps in the Venmo transaction. So all Venmo does is send an instruction to your bank. Your bank then receives that instruction, they write it down in their books and records, and then they then send an instruction to an underlying transfer network. It could be the automated clearinghouse, could be the Fedwire system or something else. That system then contacts my bank. It inquires whether my bank has enough money to pay you. Once that's been done, then there's a debit from my account. It's very complicated. And in any one of those steps, information could be lost, there could be a breach, something bad could happen. Versus in a blockchain, there are no intermediaries. I'm not sending instructions to a third party to send instructions to another third party to eventually send you money. I've sent you money. And when the block is validated, I can see that my wallet address transferred that value to your wallet address. Simple as that. The easiest way for people to understand how easy this is, because we've had a lot of talk of hacking and cyber security issues, the reason that we found the bad guys in the Colonial Pipeline hack was because they asked for Bitcoin. If they had asked for diamonds, if they had asked for cash, if they'd asked for almost any other thing, we'd never have caught the bad guys. We caught the bad guys because, not in spite of, because they used Bitcoin and we could tell exactly where the money went.
Brooks is the best one in the whole court, easily.
So the blockchain, because the blockchain was used, it was traceable.
Correct.
Yes.
And just briefly, because my time is expiring, again, as you're talking to Rotary clubs, you could give specific examples where the FBI and other federal law enforcement agencies use the blockchain, in fact, to help trace and help determine?
When I used to work at Coinbase, I ran a group that facilitated those customers. They were our clients. We did work for them.
Thank you very much. I yield back.
Man, this is
Thank
going
you.
on
The
long,
gentlewoman
folks.
from North Carolina, Ms. Adams.
They
is now
cut my stream
recognized
off.
for 5
They cut my
minutes.
stream off. I had to come back on.
Thank you, Chairwoman Waters, to Ranking Member Henry, both of you for hosting the hearing. Mr. Cascarilla, I want to touch briefly on the risk
she is
that
dripping. I like the
stablecoins might
outfit.
pose to our broader financial system. The President's Working Group report, which we spent plenty of time talking about today, expressed concern that any perceived instability could trigger a run-on on that stablecoin. In 2008, we saw the dangers of instability in prime money market funds, and now rating agencies are saying that. So how do you respond to the assertion by the President's Working Group that a run on stablecoins could cause systemic instability?
Thank you for the question. I think this is a crucial topic when it comes to stablecoins. I think the key point here is to define stablecoin. And depending on how you define it, it creates different risks. If a stablecoin is backed by only cash and cash equivalents, essentially money that's sitting in an FDIC-insured bank account or sitting in T-bills that mature in 3 months, there is no risk of a run. It's liquid cash. You've taken simply $1 and you've tokenized it. And there's very good uses for that, and there's really good reasons to set it up that way. Of course, you could decide to back your stablecoin with other assets, and certain issuers do. It could be loans, it could be CDs, it also could be other types of securities. And in that case, you start to have not really a stable coin, but you have something that looks more like maybe a bank deposit. And in that case, it would make a lot of sense, I think, for a banking regulatory regime to oversee it. And also, it could be that it looks more like a money market fund because it's backed by certain types of securities, and it would make sense for the SEC to oversee it. So we are a trust company.
Okay, I was going to ask how stable coins are not similar to money market funds, but I think you've made some clarification there. So, Mr. Haas, in October of this year, Coinbase released an operational framework of the digital asset policy proposal, in which you advocate for the creation of a new self-regulatory organization. You indicate that incorporating an SRO into the regulatory supervision of marketplaces will speed the development and enforcement of an appropriately tailored digital asset industry rule. So in your view, how can Congress and industry best come together to begin laying the foundation for a successful regulatory framework for digital asset trading platforms such as yours?
Thank you so much for this question. So I want to clarify that first on our proposal, we are seeking one single federal regulator. It could be an existing federal regulator. We're not asking for the creation of a new federal regulator. And the value that we think of having an SRO would be, this is complex. There is new innovation happening in crypto every single day. We haven't even touched on NFTs or DAOs in this committee hearing today. And we think it's important that there's a nimble group that is constantly looking at the changes in crypto. And so that's why we recommended having an SRO in addition to a single federal regulator. The way that we would love to work with you all is we think this is an important step in the process. We think that this hearing is important, but we really believe that having policymakers deeply understand the technology, getting input from the industry, understanding the use cases will help craft prudent regulation here. We believe that we agree with you all on first principles of regulation, but the how we get there is going to look very different in crypto than it has in our traditional financial markets that relied on intermediaries. I think many of the testimonies on this panel have spoken very similarly about the challenges we see, and we'd love to work with you in partnership.
Thank you, ma'am. This is to all the witnesses, and it can be a yes or no. Would you commit to, as a two-time HBCU graduate, I care deeply about making sure that your companies reflect the diversity of our country. So yes or no, would you commit to sharing data about the racial and gender makeup of your companies? I want everyone, if you can, to answer it quickly, yes or no. Yes. Are you committed to doing that? All right.
Yes.
Yes.
Yeah.
We'd be happy to follow up with your office.
Well, great. We would appreciate that very much. It is a concern of not only this committee, but certainly of one of our co-chairs, Joyce Beatty, and myself, and some others. So thank you very much, and thank you for your responses. And Madam Chair, I'm going to yield back.
Thank you. The gentleman from Indiana, Mr. Hollingsworth, is now recognized for 5 minutes.
Well, good afternoon. I appreciate everyone being here and certainly appreciate the dialogue that has been engendered thus far. I will admit to you my erudition on such matters is very, very low, and so I'm on a genuine fact-finding mission, not on a confirmation of my preconceived notions about how this could be used, or alternatively, how it should be treated by regulators. I think specifically to Mr. Allaire to start with, would you define stablecoin for me?
Sure. Thank you for the question, Congressman. There are many types of stablecoins.
Right.
There are stablecoins are called stablecoins because they are intended to hold a stable value. I think the name.
Can you clarify and be more specific? A stable value relative to what?
Well, relative to some underlying reference asset. So
Right, but that reference asset in and of itself may, in fact, be volatile, right? If I said this had 100% correlation with 1 ounce of gold,
Sure.
right? That would be stable relative to a gold,
right.
but not stable relative in an absolute sense, I should say.
That's exactly right.
Okay.
So say the purchasing power of a dollar is changing rapidly with inflation, and so, or in other countries, hyperinflation, or there's deflationary assets and so on.
Right.
So the reference asset obviously has a huge impact.
You brought this up, and I wanted to delve further into that, and I appreciate that. So not a lot, maybe not even the majority, some non-trivial portion of stable coins are backed by US dollars and are transferable to and from dollars, right? So in essence, explain to me the value proposition to me owning a stable coin that I can convert into dollars as opposed to owning the dollars themselves. What's the value proposition to a consumer?
He's asking decent questions.
It's a really great question. And I think it's good to use analogies sometimes on this.
Right.
It's sort of like the difference between having a postal letter versus an email. A digital version of a letter can move at the speed of the internet to anyone for free.
Right.
That's really an upgrade to the functionality of a letter, for example.
So-
Or digital music, the same kind of attribute. So digital currency dollars inherit the kind of superpowers of the internet, the speed, the reach,
Right.
the interoperability,
So I
and
think,
so forth.
yeah, net summary of that, right, is it is no different as a store of value than owning dollars, right, because it is convertible to and from dollars, but is different in its transaction characteristics, right? It can move faster and presumably at a cheaper cost of transaction than perhaps transacting in dollars. Is that a fair way to say that?
I think that's basically correct, although I'd say well-designed stablecoins are safer than bank deposits because bank deposits, you're taking a risk on the lending book of the underlying bank. And so you have run risk, you have default risk of all of the deposits and loans that might sit in a bank. A full reserve form of money, which is what a dollar digital currency such as USDC represents, is actually a safer form to hold, not just store value, but as a transactional medium as well.
Right, assuming that you hold your dollars in a bank account.
That's right.
Yeah, there is some level of counterparty risk. We have worked hard, frankly, in this country and through a regulatory environment of minimizing that and through federal government guarantees, but that remains non-zero if trivial, right? So walk me through the transaction value of owning a stablecoin, right? And here's my view just outside of this, right? I understand the notion that if I go to a retailer that accepts that stablecoin, right, then I can transact with them, presumably at a lower cost to that retailer. Hopefully my prices are lower on account of that, and I can transact faster with them. But there is a non-zero transaction cost associated with getting into that stable coin, right? So I've kind of traded this notion of accelerating my pace of transaction and lowering the cost once I get into the system, but there are costs to get into the system, right? I have to buy whatever that stable coin is from dollars, right?
Yeah, so I can speak in the case of USDC.
Please.
So if an institution wants to transfer dollars into USDC, we don't charge a fee for that. And
But I have to get set up to do so, right?
You need an
No, it's not-
account.
I can't just go and get a debit card, use my debit card out of my bank account. I have to set up an account.
What is he
right?
getting
Presumably
at
you have
here?
some process by which I do that. Once I get over that hurdle, then I can transact inside that.
That's correct. And
Yeah.
and I think many users of stablecoins keep their value in stablecoins because they are now able to use a very, very efficient payment and settlement medium.
Yeah.
So that's attributed to the high growth that you've seen is partially attributed to that.
So is the value proposition that this network of those that accept this is going to expand so more people are going to keep that in stablecoins? And then my second question is going to be, why can't the same technology that runs stablecoins eventually run the payment system in dollars? Right? Won't we eventually cut out the middle step of having to convert to a stablecoin and then transact in this frictionless and speedier environment? Won't we eventually have to figure out, run that through the existing payment system?
Well, I think there's two points here. So one is dollar digital currencies like USDC are both kind of protocols and are a representation, a form factor for a dollar. And there are network effects there, just like there are network effects in other internet protocols that we use for things. And I think that's significant. To the second question, I think in some ways it's a question of semantics. When I use the IOU settlement system of a Visa card, I'm not actually like spending dollars per se. There's a bunch of IOUs that are on a centralized ledger that are keeping track of things. And then ultimately underneath, there's a Fed wire that goes from one bank to another. We experience it as, well, this is this card, and there's a whole elaborate kind of system underneath that charges fees. I think what we see, well-regulated stablecoins are an upgrade to those kinds of payment systems to be ready for the internet era.
I appreciate the chair's indulgence.
Thank you. The gentleman's time has expired. The gentlewoman from New York, Ms. Ocasio-Cortez, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you to all of our witnesses who are here today at this hearing. Before I get into the heart of my questions today, there was a slight discrepancy in some of the testimony and questioning from earlier today. I just wanted Ms. Haas to clarify very quickly. Earlier today in the hearing, Representative Velasquez asked about proprietary trading on the Coinbase platform. And in that moment, I believe you had told her, quote, that Coinbase does not engage in proprietary trading on our platform. All prices are established, et cetera. However, in looking at the Coinbase rules under Section 3.21 under Coinbase Corporate Ops, it says, Coinbase Inc., which owns and operates Coinbase Pro and Exchange, also trades its own corporate funds on Coinbase Pro and Exchange. And I just wanted to give you briefly the opportunity to clarify.
Thank you so much for the opportunity to clarify. There's a few things that we do in our business. So one is we do have a corporate investment portfolio that every month we make an investment of crypto and add to our balance sheet. We've not sold that. We don't trade it actively, but we do increase the investment on a monthly basis on pre-established investment protocols. We do buy those on our exchange.
Got it. Understood. Thank you very much. So to the heart of the matter. Crypto, as we know, is a growing industry. It's rising in market value from $500 billion last year to more than $3 trillion as of November of this year, 2021. There are a lot of advocates, proponents of the cryptocurrency industry that discuss the creation of new digital currencies, I should say, and building safer, more inclusive system outside of the traditional financial sector. But I kind of want to explore this assertion a little bit more. Mr. Allaire, a substantial portion of the buying and selling of cryptocurrencies is done with stable coins, correct?
Lee, thank you.
A significant amount is traded with stablecoins, yes.
It's about 75%. Does that sound about right to you?
I don't have the data in front of me, but it does sound roughly correct.
And these stable coins are designed to be backed by certain reserve assets, whether they are primarily USD or safe, highly liquid cash substitutes. Essentially, a coin to be stable in value so that people can kind of use it in a larger world of crypto where other coins could perhaps be a little bit more volatile in their value.
I can certainly speak to the design of USDC. I can't really speak to others. Mm-hmm. So yes, USDC is designed as a payment instrument under electronic money, law in the United States, and so it's cash and short duration U.S. government treasuries, which is the underlying instruments for the stored value.
In fact, your firm recently announced a transition to one-to-one backing in dollars of USD coin after it was found that only 60% of the coin was backed by cash or cash substitutes. So if the cryptocurrency industry hypothetically lost its ability to use stable coins as a bridge to trade in and out of dollars tomorrow, would that cause a significant shift? It seems as though it would not be able to work the way that it does currently, correct?
Edgar, well, I appreciate that.
I think, a primary reason why stablecoins are so powerful is that they're a superior form of settlement. And so the existing banking system moves slowly funds take several days for them to move, and there are significant fees, and the access to that can be limited. Whereas blockchains operate continuously, and settlement happens at the speed of the internet. And so I think it is important that payments and settlement in these new forms of internet financial products and services can operate at the speed of the internet. And so I think it's essential, in fact.
I see. Thank you. And so, lastly, what would you say to some of the folks who are listening to what some folks are saying, not just here on this panel, but in the larger world? So the folks that say, what do you say to the folks that say, basically, this doesn't seem like a new financial system per se, but really an extension or perhaps expansion of our present one?
Well, I would disagree with that. I think what I believe we're seeing is a new open infrastructure layer on the internet, a missing infrastructure layer of the internet that is designed around value exchange and economic coordination, that is rooted in immutable data, the ability to interact with counterparties in a very, very safe way that hasn't existed before on the internet. And really, many of the efficiencies that the internet brings in terms of moving information brought into moving value, but also with greater degrees of security than are often offered to the existing financial system. So I really do believe we're building a new global economic infrastructure layer, and we're certainly—
And you would say that that's not distinct. You would argue that that is distinct, not an expansion or an increase in the sophistication of our current financial system.
I believe, for this to take hold, it needs to be well integrated with our existing financial system, and we've long believed in a kind of hybrid model that does that.
Thank you very much.
You're welcome.
Thank you. The
I had to
gentleman's
order some
time has
food,
expired.
folks.
The
I
gentleman
ordered
from
some food.
Ohio, Mr. Gonzalez, is now recognized for 5 minutes.
Thank you, Madam Chair. I truly appreciate this hearing. This is a great hearing. I want to start with Mr. Brooks, and I'm going to attempt to respond to some of the objections, which I believe demonstrate a complete and utter misunderstanding of what we're even doing here today. One contention is that the vibe of crypto is a stick-it-to-the-man vibe, but in actuality, it's dominated and controlled by big tech and Wall Street. While the culture may be somewhat accurately described, the notion that a handful of big tech leaders and Wall Street banks somehow created and now control crypto is absurd on its face. And frankly, anyone who would make such a claim, I believe, should be ignored on this topic. My contention is that Web3, crypto, blockchain, et cetera, by its very structure, has the ability to solve some of the most difficult and frustrating problems that the current version of the internet and the financial system have, where a narrow set of platforms control what we see, how we interact, and what we buy, while millions of Americans remain completely disconnected from the financial system. Web3 can turn this entire thing on its head in a very empowering way. So my question is simple. How specifically could you see Web3 solving some of these bigger challenges associated with the current version of the internet and the financial system?
Well, Congressman Gonzalez, thanks for the question. When I go back to the criticisms that you're just recounting, the only part of that I heard was hip. I'm going with hip. The rest of it, we can come to. But in terms of the problems being solved, I think the first issue is the biggest critics of cryptocurrency have been the biggest banks. Those are the people who are the most concerned about the entry of stablecoins into the payment system, about the ability of crypto assets to build networks that are away from the clearinghouse. Those are the biggest critics. And so I think that tells you a lot of what you need to know. And the reason is because the way that Web3 solves a lot of problems, it's really twofold. First of all, it eliminates the toll collector role of traditional banks and traditional broker-dealers. The main thing that they do is they employ large numbers of human beings maintaining ledgers of account and allocating credit for a fee. Bitcoin and other cryptocurrencies do that without human beings and with no fee. And the elimination of minimum account balance fees, the $25 wire transfer fee that your bank charges to give you 3 days to send money abroad, those are gone. Okay?
Thank you.
That's what's so important. But the last part is it unlocks value that traditional economic structures don't unlock. The creator economy, play to earn in the gaming system, those don't exist.
So I want to go to Ms. Haas on that. Building off this, in your testimony, you mentioned use cases for Web3 in the creator and gaming economies. Could you please outline a specific use case and discuss how Web3 can empower creators and artists over mega tech platforms, which was implied earlier? And quickly, please, if you could.
All right, let's talk really quickly. I'll cite the one that we just talked about earlier, which is in the month of November, play to earn. So these are where video games, one can play a video game and earn NFTs. Those NFTs are in-game experiences. So if anyone here has young kids who are playing with Roblox, playing with Minecraft, playing with these, there's in-game experiences where you can buy avatars, you can buy various things. These can become NFTs. These NFTs then can be sold for value. And so what we're having here is these kind of the concept of a play to earn. You can play the video game, you can earn money, you can then monetize that back into fiat, and you can create these new economies and these new communities that have increasing value.
Thank you. Mr. Bankman-Fried, I believe you live in Hong Kong, is that correct?
Sorry, repeat that?
Do you live in Hong Kong, is that correct?
I do not anymore.
Oh, okay. Well, let me ask the question differently.
I did at one point.
Okay. So 10 years ago, certainly 20, 30 years ago, if you wanted to start a major internet company, you probably wanted to do it in the United States. You probably wanted to do it where you grew up, in Stanford on the coast in Silicon Valley, for a whole host of reasons, one of which being a very, very conducive, innovative environment. When I look at Web3, I see a lot of projects moving overseas. To what degree is the current regulatory environment in the United States contributing to this change where projects are now being built and domiciled in nations not the United States, whereas in the previous versions of the internet they were?
I do think it has contributed to that. I'm optimistic that we're going to see changes to the framework over the next few years that will bring us into a world that can make the United States the source of the deepest and most liquid markets in the cryptocurrency ecosystem. I don't think we've seen that historically. And if you look at the difference between the volume distribution of crypto and digital assets versus most other industries, you can see that.
Mr. Brooks, do you have
Christina,
any thoughts on that?
I appreciate that. Christina.
Well, Congressman, as I said earlier, there are certain activities that our G20 partners seem to think are perfectly appropriate, legitimate, and subject to regulation, and we keep resisting. Those have moved abroad.
Thank you, and thank you, Madam Chair. I yield back.
That guy had some good questions
Thank
right
you.
there.
The gentlewoman from Michigan, Ms. Talib, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you so much for everyone that have been coming forward in regards to this important issue. Cryptocurrency like Bitcoin currently consumes enough energy to power a small nation, and that's something that continues to be missed in this debate around this issue. And, the University of Cambridge analysis estimated that Bitcoin mining consumes 121 terawatts hours a year. To put that in perspective for everyone, that's more electricity than the entire country Argentina consumes. That's more than the consumption of Google, Apple, Facebook, and Microsoft combined. One Bitcoin transaction, a single purchase, sale, or transfer uses the same amount of electricity as the typical U.S. household uses in more than a month.
XRP and 8 bar.
This is really outstanding to me, and many folks do not know this, many Americans and folks that are talking about this issue. And so, Ms. Dixon, can you explain why for a cryptocurrency like Bitcoin that rely on proof of work model mining is such an energy intensive process?
Thank you for the question. This is a really important area, obviously, in terms of sustainability and
she's
the
from
focus
Stellar
on what
XLM,
we do
by
in
the
this
way.
Space. We should always be trying to do it better and much more efficiently. In Bitcoin is the proof of the way that Bitcoin consensus is achieved is through really complicated math equations. And so there's a lot of energy that's needed to be used to be able to make that happen. I know best about the consensus mechanism on Stellar, which is the Stellar Consensus Protocol, which can be done on a very small computer, any of the ones that you have in front of you. And we had a University of London did a study on the Stellar network itself, and the network is low in terms of energy consumption. It's around 0.00022 kilowatts per hour for each transaction. That's less than a transaction for Visa. So that's a really important comparison for us all to think about. So not every consensus mechanism is proof of work or proof of stake. Again,
she is
there are
so
many
happy
different ones out there, and depending on the mechanism,
that she got
it
asked
depends on
that.
the energy consumption. But it's definitely important for us to be able to try to do this better, more efficiently, and to consider the sustainability concerns around it.
She is so happy that she just got asked that.
You talked about a model that potentially, to shrink cryptocurrency's enormous carbon footprint. I'm particularly alarmed that previously, idled, shut down coal plants like the one operated by Greenwich Generation in Seneca Falls, New York, are now being brought back online to aid in cryptocurrency mining. And I don't know if the chairwoman knows this, but like in Montana, a coal-fired generating station is now providing 100% of its energy to Marathon Digital
Lone Wolf, thank you.
For Bitcoin mining under the power purchase agreement. Prior to the crackdown in China, it was estimated that nearly 2/3 of all Bitcoin mining took place in China, included in regions with very heavy power generation, such as Mongolia and other areas. But Ms. Dixon, should the world's central banks and governments be taking a more active role in monitoring and regulating cryptocurrency in order to bring energy consumption and carbon emissions in line with our own targets here in our country at the Paris Agreement? What would that look like?
I think it's really important for us as an industry to really focus on this issue, even without regulation. I think it's something that you need to always balance the value of what you receive in terms of the harm that's actually created to the environment. So we constantly have to be doing that kind of analysis. I think that we all need to focus on minimizing the energy consumption as much as possible, and then think about how we can work with governments to be able to consider the best way to achieve that kind of the carbon neutral status that I think a lot of folks want us to get to. So I encourage constant discussion. I encourage us to be innovative. This is one of the wonderful things about blockchain and just innovation generally. You look and you use technology to help to solve problems just like this.
All right, my food is about to be here, so I'm going to hop off.
Fundamentally is incompatible with the environmental neutral future. And so, what tools, you're saying we got to move in this direction, Ms. Dixon. What tools can policymakers like ourselves look at to incentivize, to move us towards away from that model? How can policymakers accelerate that transition away from carbon intensive mining? We know our planet is burning. The climate crisis is here. And I just want to get the cryptocurrency community to become part of the solution and not make this crisis even worse. So can you talk about things that you would suggest for us to be working on in regards to this issue?
Obviously, I'm keeping the stream on.
We've actually engaged a third party to be able to look at the additional energy consumption, not just for what as I mentioned, the University of London did with respect to the work that they did. But I do think it's important to be able, and we're engaging a third party to look at all of the different transactions and how the network actually can even be better and better with this with respect to Stellar. I think that same kind of work can be done with all of the different types of consensus mechanisms out there. So I think research and more focus on what we can do to achieve sustainability and our sustainability goals is an important mechanism, and I think it would be really good to continue that conversation with you.
Thank you, and I yield.
Thank you very much.
Thank you, Adrian
Mr. Rose,
and Antonio. Thank
is
you.
now recognized for 5 minutes.
Thank you, Chairwoman Waters, and thanks to Ranking Member McHenry for holding this hearing, and thanks to our witnesses for hanging in with us for such a long period of time. Your testimony and participation today is very important to helping us understand this area and craft the appropriate policies going forward. Mr. Beckman-Fried, FTX and FTX US have grown substantially over the past several years. Could you tell us about the economic impact from your perspective that FTX US has in this country?
Yeah, thank you for the question, Congressman. In addition to obviously the impact in terms of the hiring that we're doing and the support of a number of initiatives in the country related to job training and education, we're also hoping that we can help provide financial services to people who have not had easy access to those before. If you think about the number of intermediaries that are involved in a traditional financial transaction, whether it's using a bank or whether it's investing your assets, that's a lot of points that can be very difficult to navigate for a number of people, both in this country and in the world. We aim to be able to provide services to everyone here, all easy to access on a mobile phone, giving inclusive and equitable access to financial markets that have been missing to a number of people.
So obviously, you describe a great many benefits to the U.S. economy. So in your view, how do we keep this innovation happening in the United States?
So I think I'm optimistic that on the regulatory side, we're not that far from that point, and I think that there are a few clarifications that could go a very long way here. I think that on the market side, having a framework with a single regulatory structure, and it might have multiple regulators involved in it. The CFTC and SEC are both likely to be involved to some extent, but having a single unified framework for futures and spot digital assets could go a long way towards providing the sort of experience that you can offer in a lot of jurisdictions today. I think that giving clarity on the stablecoin side of audit requirements for the reserves, but without sort of squashing innovation by requiring only a very limited number of institutions to be able to issue them, could go a long way on that side. And then the last thing I would say is moving away, hopefully, from a binary distinction of what asset class you are a part of, where one is very much close to a death sentence, and moving towards a structure where we identify the necessary disclosures for certain digital assets related to the issuance, related to the supply, related to anti-fraud measures, so that they can all be part of our financial ecosystem with appropriate disclosures and anti-fraud mechanisms and regulatory oversight would be really valuable.
The chat is now getting botted.
I want to turn to you.
Please do not invest in Pomeranian. That bullshit, it's getting botted.
King for a day, and you were going to tell us, here's what you need to do to structure the regulatory framework. In a minute and 39 seconds, tell us what that would look like.
I mean, I can barely introduce myself in a minute and 39 seconds, Congressman. I come back to the concept of parity. I don't know why we believe that incumbent institutions are risk-free and anything new is highly risky. So if I have a platform built on a blockchain that is doing lending, I don't know why it's so hard for us to say that can participate in our banking system. If I decide that XRP is a security, why won't we let it list on a U.S. exchange?
Whoa.
The problem is we treat crypto assets differently from all other assets.
XRP?
And the answer is just recognize them for what they are. These are assets that represent some underlying activity. It could be a network, it could be an application. They have a value that people are willing to buy and sell at. Let them in. That would be my message. Let them in.
Okay. And I'm going to ask this question and then ask you all to respond after today. I recently read an article entitled The Bitcoin Boom and the Quantum Threat. I bet most of you have read this article by Arthur Herman, who is a senior fellow at the Hudson Institute. The article discussed the fact that quantum computing could pose a security risk to the blockchain technology. My friend, Mr. Perlmutter, earlier asked Mr. Bankman-Fried about this topic, but I think it's worth revisiting. And I would open this question up to all of you and ask you to respond in writing. Do any of you worry that in the future quantum computing could be used to compromise the security of blockchain technology? And I see my time's expiring, and I'll just go ahead and yield back, Madam Chairwoman. Thank you.
Thank you very much. The gentlewoman from Pennsylvania, Ms. Dean, is now recognized for 5 minutes.
I thank the chairwoman, and I thank all of you for being here today and testifying before us. I want to start in a general way, and I'm thinking, Mr. Brooks, of what you said about the practice of law. With the advent of emails, I was a younger lawyer then and remember all the fears around it. And so, as has been said, and this is really a follow-up to what Mr. Green asked long ago, hours ago, it's obviously clearly a fast-growing and a bit mysterious market. Looking at the total cryptocurrency market cap over the last year, as some here have reported, it exploded from about $500 billion a year ago to now almost $3 trillion as of last month. But it's also clearly a volatile, fast-moving market. As of last night, the total market cap is back down closer to $2.4 trillion. Another example of volatility in Bitcoin, which lost half of its value over just 2 days in March before rebounding. So to that notion, to the people who find all of this a bit mysterious, are we at risk? Do we see warning signs of a bubble in this marketplace, if I'm allowed to call it that? What do we do to make sure that the industry does not threaten the overall stability of our financial system? Maybe, Mr. Brooks, I'll start with you.
Thank you, Congresswoman. It's good to see you again. I'll just give you a very quick anecdote. When I was practicing law, I represented one of the largest mutual fund complexes in the United States, and in their market room, they had a chart, a physical chart showing the U.S. equity market from 1792 to the present. What I remember about this room is it was a full city block long, and if you stood at the end of the room and looked at that chart, it was a straight line up and to the right. But if you walked right up close to the chart, you could very clearly see the Civil War and the Panic of 1907 and the Great Depression and all kinds of other volatility along the way. What I would tell you is, in the beginning of a fundamental technological revolution like this, the early days are going to see turbulence, but the long chart of crypto in only its 11-year history is up and to the right, just like the U.S. equity market. So what I would say is, there are risks, there's disclosures that ought to be had, there's framework regulation should be adopted, but the fact that the price goes up and down doesn't make it any different from U.S. equity markets in the first 100 years of the country's existence.
Well, that's a great comparison and probably a metaphor for other things that we are struggling with in our democracy. Hopefully, the upward trend is the trend. Let's pray that that is so. A little more specifically, all digital assets clearly don't fit into our current fiscal regulatory frameworks. And so we're here to try to learn what are the right policies to make sure that this is appropriately regulated. Do we need to start from scratch and create an entirely new framework for crypto with a new regulator, such has been suggested by Coinbase? Ms. Haas, can you talk about Coinbase's view that Congress should regulate digital assets under a new framework with a single regulator?
Thank you for the opportunity to clarify. So yes, we do believe that there's benefits to having a single regulator that can address the broad strokes of crypto generally. I share a lot of the views that Mr. Bankman-Fried had in his written testimony. I also share the views of Mr. Brooks, where you say, if it is a security token, then it is going to fall under the SEC. If it is a commodity token, then it will fall under the CFTC. But we have also new tokens here. And when you think about NFTs and an NFT marketplace, when you think about Bitcoin itself, when you think about these new protocols where all you're doing is getting a right to governance in a protocol, they do not fit under the contours of existing frameworks and neat definitions. So I think that we benefit from definition taxonomy. I think we benefit from clarity on who we go to kind of walk through these issues and find one voice. And we think we benefit from an SRO that can really get into the weeds of these issues and help us move with speed, in the regulatory speed, to keep up with the pace of the innovation of the industry.
Thank you very much. I appreciate that. Mr. Casarillo, you also said in your testimony that, quote, a primary prudential state or federal regulator should regulate both digital asset companies and their products. Could you elaborate?
Yes, thank you. Paxos was the first company in the entire country to become regulated. We operate using a trust company status, and the reason we do that is because we don't make loans and take deposits, so a trust company is actually safer than a bank. And so that's an example of using a state regulatory authority in order to oversee our business. And I think having either a primary regulator that's on the state basis or on a federal basis is what will allow there to be a consistent application of AML, KYC rules, reserve rules, customer protection rules. And so there isn't a clear way to be able to do that right now. We feel this even ourselves as a trust company where we don't have explicit reciprocity on a state-by-state basis. I think being able to create a clear parity across the board, as Mr. Brooks was saying, is very important for the industry.
I thank you, and my time has expired. I yield back.
Thank you. The gentleman from Wisconsin, Mr. Stile, is now recognized for 5 minutes.
Thank you very much, Madam Chairwoman. As you may know, I serve as the ranking member on the Select Committee on the Economy, along with Chairman Himes, both of us also members of this committee. And we're holding the first of two roundtables tomorrow on financial inclusion and access to banking for underserved communities, a topic we talk a lot about also in this committee, and an issue front of mind for many underserved communities around the United States. And so, Mr. Brooks, I'd love to get your thoughts on the relevance of today's topic for financial inclusion and how the growth in digital assets and decentralized finance can actually drive inclusion, and can underserved communities benefit from these developments?
I love that question, and thank you for giving me a chance to address it. Couple of things. So first of all, let's ask, why do we have so many underbanked people in the United States? And the answer is a combination of minimum balance fees, monthly account maintenance fees, and all kinds of other things that are a hallmark of the money center model that banking is built on, right? If you talk to Mr. Allaire about his product, he would tell you they don't have any minimum balance fees. They don't have any monthly maintenance fees. You can keep your assets in a tokenized bank deposit for free. So that's the first answer, is there are no $10 a month fees, there are no $25 wire charges. Those things don't exist that eat away at your life savings, A. And B, the next most important thing about crypto is, here you have an early stage asset, which unlike the IPO boom, unlike venture capital, doesn't require that you know a guy or that you be well connected or that you be an accredited investor to participate. This is a chance for underrepresented communities to be in on the wealth creation stage of some new thing as opposed to coming in at the end. And so what I always say is, that's the way you solve underrepresentation, is through wealth creation. This is an opportunity, and that is why there are more minority investors than white investors in crypto in the United States, is because
I appreciate your comments, because I think in general, technology is one of the key aspects that we have to really address some of the underserved communities in the United States. And I agree with your comments. You may enjoy our hearing tomorrow on the Select Committee on the Economy. To build further, what do you see as the main regulatory impediments to further innovation in this space, if we think it's really going to help us on the inclusionary aspect?
It's all incumbency protection. The big banks don't like this. The big banks have been slow to adopt because they make a lot of money on those fees I just mentioned.
Okay, so let me keep going with you if I can, Mr. Brooks, in the time that we have. In your opening testimony, you talked about the do no harm approach, and that approach helped bring in a period of tremendous growth and opportunity in really Web 1. You mentioned that some of the countries that U.S. crypto businesses are moving to. What are some of the examples of the positive approaches to digital asset regulation that you see in those countries? If you had to put your finger on it.
Well, for example, responding to market demand. If a whole bunch of customers want to buy a Bitcoin ETF, why is it our business to say they can't do it, right? I mean, you see this domestically, New York versus the rest of the United States. Lots of investors like to buy certain tokens. New York won't let New Yorkers buy tokens. So they're safe in Nebraska, not safe in New York. Why would that be?
Thank you very much. I want to shift gears to you, Ms. Haas, if I can. I want to ask you about your firm's interactions with the SEC. As you know, the SEC blocked Coinbase from launching its Lend product earlier this year. Your CEO, Brian Armstrong, has been very vocal about his concerns with the SEC's decision and the process by which it reached that decision. I think it's important that regulators apply standards consistently, and so I want to better understand how this played out to the extent you can help us here. Has Coinbase had further conversations with the SEC about why it was not allowed to offer the Lend product?
We have, and we still do not have clarity as to why our product was not able to proceed.
And so how would you characterize the discussions you have had with the SEC? Is a little bit of a black box? I don't want to put words in your mouth.
At this time, that we have provided a lot of information, but not had clarity as to why or why not we can offer a product.
Man, come on, they're
That's
working.
helpful. I think it's something that this committee needs to consider and look into.
They're secretly working with the SEC.
Assist technology being developed here in the United States rather than abroad, and appreciate your comments there. If I can, in my final 1 minute, Mr. Cascarilla, earlier in today's hearing, you talked about how people around the world want stability of U.S. dollars. We all know of countries with out-of-control inflation and autocratic governments. Can you talk just briefly about how digital assets and Web3 will help people dealing with these challenges?
Yeah, well, I think it's really important to recognize that in the U.S. we have a sophisticated financial system. It certainly can be better, but it's sophisticated and relatively stable, certainly compared to most places in the world. And when you look at the developing world, it's access to financial services that is a real problem. And I think in significant ways they want access to U.S. dollars, but they also want access to crypto. They want to have the ability to protect themselves when they're in either politically unstable environments or economically unstable environments or both. And this technology creates the capacity to create a global interconnected way of being able to operate on an economic basis that hasn't existed before. And that's very powerful. The U.S. should take advantage of it.
Thank you very much, Mr. Cascarilla. Appreciate all of our witnesses here today. Madam Chair, I yield back.
Thank you. The gentlewoman from Texas, Ms. Garcia, who is also the Vice Chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you so much for this hearing on such a fascinating and critical topic. Blockchain technology has the potential to change how we transact around the world, not just in the financial sector, but across multiple industries. Indeed, digital assets have expanded the financial marketplace in unprecedented ways already. The Bank for International Settlements recently found that decentralized finance has grown to an estimated $250 billion worldwide. I want to zero in on one part of these transactions that's already been talked about a little bit, but I want to build on it, and that's the cross-border transactions. Ms. Dixon, your
Here we
company
go,
is a
cross-border.
nonprofit clearing network designed to facilitate financial transactions worldwide. In your testimony, you say that your primary focus is to facilitate cross-border remittance transactions for over 800 million people supported by funds by migrant workers. In Texas, an estimated 3.1 million immigrant workers comprise about 22% of our labor force. And in my district in particular, we are 77% Latino. So this is of great interest to me and to them. Many of these workers, however, face the same financial struggles, not only the financial struggles, but also access to the financial services industry. And it's multiplied by cultural and language barriers. So specifically, what is it that you think that this sector now will be able to do to be able to provide better access to wealth, better access to the financial services industry, considering the economic and language barriers that many migrants face?
This is like stellar
Thank
promotion.
you so much for the question. This is another one of those areas that I love to talk about. Because
Oh,
I
of
think
course
it's
you do.
We have limited time.
There are a lot of important pieces here. The interoperability with the existing financial infrastructure means that individuals that don't actually have bank accounts, but something like a MoneyGram relationship, which is in Texas, based in Texas, that we have on the Stellar Network, it allows these individuals that have cash, but they might not have a bank account, they can walk into MoneyGram, convert their cash into a digital asset, and then send that asset to their family, to their friends, to anyone that they choose outside using the blockchain. And then and then those individuals that they sent it to could send those digital assets to a MoneyGram location outside the country in those regions that are participating, and they could then remove those assets from the blockchain. This is getting to the unbanked and the underbanked all over the world.
At the receiving end, how do they then convert the MoneyGram or whatever, I forget what you called it, into their
local currency.
Their local currency.
Right. Well, this is what's
And is there a fee involved there for the conversion, much like there is for traveler's checks?
So it's very important that on the network layer, the fees are very, very low. But we have pricing pressure created by the fact that these network fees are low. So there is going to be a fee when you have feet on the ground and you have an ability to make that transaction. So the end user who wants to go pick up their fiat at the local MoneyGram, for example, they will pay a fee. But there are no other intermediaries that are layered on top of that, and the fees are much lower than those that you see in the traditional financial infrastructure. So I feel like with this particular relationship and also just with this technology generally, what it opens up is a world for those users, as Mr. Brooks indicated earlier, where they get access to all of the ability to hold these assets, to be able to create value for themselves.
Well, I will follow up in writing with just how you're planning to reach with those communities, because I can imagine many remote villages, many remote rural areas, even in our great state of Texas, that you're not going to have access to this wherever you're supposed to pick up the money at the receiving end. So I have a lot of serious concerns about that, but I know that you've reached out to my office and we can talk. I want to now move on to, I'm glad that you all are sharing a lot of data and posting things on your webpage. From each one of you, will you commit to providing transparent information, not only on your employment numbers? I know that Ms. Adams asked about that, but also in terms of your leadership, your board of directors, and salaries and wages, because I know at least one of you has already had a New York Times review that was not very good, and I'm not going to pick on anybody. I just want a commitment from everyone on diversity and inclusion and transparency. And just say yes or no, please.
We can commit to that.
Damn.
Yes.
Yes.
As a public company, our data is available.
I'm sorry, I can't hear you, ma'am.
As a public company, our leadership and our board data is available.
I didn't hear from Mr. Casarella.
Yes.
Thank you. Thank you so much, and I've got 15 seconds. The other thing that I would like to see is, and I can follow up with in writing, is demographic data on your users. How many are Latino, how many African American, how many, and also by income. Because I want to make sure that, again, that the users are diverse and that your leadership reflects that. Thank you.
Thank you. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. I want to talk about ransomware. Obviously, we've seen an exponential increase in number of attacks in the last months and years, and it seems to only be getting worse. I know the crypto industry believes it can and currently does play a critical role in preventing illicit finance, including ransomware. Could you, maybe Ms. Haas or Mr. Bankman-Fried, could you describe for us how your firms take an active role, such as working with law enforcement and other market participants when these ransomware attacks occur? I just would like to get a better sense of the role centralized exchanges play with the flow of funds. For example, how do you keep track of tokens, transactions, and wallets? And maybe, including in your explanation, discuss the Colonial Pipeline attack and how the FBI was able to retrieve a substantial portion of the ransomware payments made. Whoever wants to go first.
I guess I'll jump in. Yeah, we work really actively on this. In addition to all of the standard procedures that we have around surveillance of deposits, of withdrawals, and of our customer information, we are responsive to law enforcement inquiries constantly. Around this, we are helpful whenever we can be, both in terms of information related to FTX and our users, but also, we can extend that out to blockchain histories. Because it is a public ledger, we can trace these assets through, and we can say, hey, you should go talk to this place next. This is where it seems like the assets probably ended up. We have assisted in, I think, somewhere north of $10 million of successful seizures so far, in cooperation with law enforcement related to this.
That dude is David Schwartz and Vitalik Buterin in one.
If you can get a percentage back, why can't you get all of it back?
If you can get, sorry, a percentage of the...
Again, the Colonial Pipeline attack, 70, 80% of the ransom was retrieved. So what is the difference in the Bitcoin that was successfully retrieved as to the one,
right,
the one that was not?
We can follow up with specifics on that case, but I'll say in general that any assets which are on our platform, we can retrieve. And often there is, you might see a case where some of the people involved would send assets in one direction, others would send it in another direction, and those others might not be in a trackable way. But anything that is on our platform, we can retrieve.
Sure, thank you. Maybe follow-up question, do you have any tools that we could help put in your toolbox, Congress, legislation that would facilitate greater recovery percentages?
So I think that speed is frankly one of the more important things here. I think like in any investigation, the faster that law enforcement can act on this, the greater the chances of recovery are. And so I think that, we would love to just have standardized open lines with law enforcement where they know exactly how to reach out to us. We can have phone numbers available because, the faster that action can be taken, the greater the odds that the assets are, retrievable.
Sure, thank you. Mr. Allaire, one curious statistic regarding the cryptocurrency ecosystem I've noticed is its popularity with a younger and more diverse demographic. According to Pew Research, among African Americans, 18% have some level of experience with cryptocurrency, while among white Americans, the comparable figure in the survey was 13%, Hispanic, 21%, Asian, 23%. Additionally, 43% of men between the ages of 18 and 29 have invested in, traded, or used cryptocurrency. These numbers are incredibly divergent from what we see for traditional finance. Why do you believe that to be the case?
Thank you for the question, Congressman. I think what we see with crypto assets and digital assets more broadly is it's a form of finance that makes sense to young people. A lot of younger people have grown up with the internet. They were born with the internet in their crib, so to speak, and I think have an expectation of value being able to be used the same way that they can, share a JPEG photo or react to something. And so I think there's just a familiarity and an expectation that, of course, everything's going to be digital. And so I think the expectations are different. I think that, a component of digital asset markets is this concept of democratizing access to financial markets, and digital asset markets do that. There is more democratized access. There are fewer barriers to entry for individuals, and I think that affects the adoption rates in minority communities. It affects the adoption rates more generally on some of those other demographics. So I think those are some of the key contributors.
Sure, thank you. Madam Chairwoman, I want to thank you for holding this hearing. It has been very productive, and I think this is a good example of how this committee should learn about important issues that are facing the American people, and we need to regulate carefully. Thank you, ma'am.
You're welcome, and thank you for your participation. The gentleman from Massachusetts, Mr. Auchincloss, who is also the vice chair of the full committee, is now recognized for 5 minutes.
Thank you, Madam Chair. I appreciate the written and oral testimony from our expert witnesses. It's timely. The current regime of regulation by enforcement, in which entrepreneurs must negotiate with the SEC or the CFTC on a one-off basis, is not fair, it's not efficient, or conducive to U.S.-based innovation. Congress needs to provide clarity and predictability by statute, and I'm ready to work with both my Democratic and my Republican colleagues to provide that. The rules of the road for Web3 can be a bipartisan initiative. The United States needs a primary crypto regulator that is tech and market structure neutral and that has 3 imperatives. It compels disclosure and transparency, it prevents fraud and abuse, and it promotes the efficiency and the resilience of the market. And this primary regulator should work with a self-regulatory organization as a counterpart in the private sector to establish one light-touch rulebook for spot and derivatives listings, custody requirements, token issuance, asset servicing, cross-margining, settlement, know your customer and anti-money laundering, disclosure and auditing, and of course, stablecoin standards. Mr. Bankman-Fried, on that final point, stablecoin standards, which you've identified as perhaps the most important crypto innovation, in a recent interview on Invest Like the Best, you identified stablecoin regulation as a, quote, substantial step forward for persisting dollar dominance globally. And to quote you further, you said, there are going to be stablecoins in the world. And if you ban US dollar stablecoins, then it's going to be euro coins or it's going to be yuan stablecoins. And in your written testimony, you propose a 7-part framework for stablecoin regulation, and I want to thank you for the thoughtfulness behind that. Within this framework, can you identify the single most important thing that Congress could do right now to regulate stablecoins in order to persist dollar dominance?
Yeah, thank you for the questions. I think the single biggest thing is just ensure the reserves are what they say they are. That is the fundamental large portion of the risk that could be posed by them is from both a consumer protection and a systemic risk perspective is what if there is a $1 trillion stablecoin with only $1 billion actually backing it? And so I think having daily attestations and periodic third-party audits to confirm that the stablecoins are backed one-to-one with regulatory oversight of that process is by far the single most important piece of that.
Does any of the other members of the panel disagree or want to expound on that statement? Mr. Allaire?
Yeah, I would jump in. I think what Sam has outlined is a really productive framework. I think clarity on this, on the disclosure and reporting requirements, and I think also on the reserve and liquidity requirements and having that be a focused set of statutes could be extremely valuable to providing confidence to the market, providing confidence to market participants, and allow dollar digital currencies to flourish on the internet.
So if you say that this stablecoin is tethered to the value of the US dollar, you've got to disclose on a regular basis that you've got the liquidity and the reserves to match that, to reduce run risk, and you've got to be willing to be audited by a primary regulator.
Absolutely.
Is Mr. Bankman-Fried, you've said that you think that is the single most important regulatory step the United States could take to persist dollar dominance. And I don't want to put words in your mouth, but it struck me from the interview you had on Invest Like the Best that maybe the most important thing we could do, period, for crypto innovation. Does anybody on the panel want to expound on that or disagree with that statement?
I'll add some thoughts here. I completely agree that this is the most important thing that the U.S. can do. At the moment, it's not clear exactly how you can trust a dollar stablecoin, and that's unfortunate. Money is ultimately a product, and the way money is working today for people leaves a lot to be desired. Being able to put a dollar into a blockchain environment solves so many problems that we've been talking about all day today here. And I think that it's crucial for us to be able to set a clear regulatory plan in place that creates parity across all of these different products. And so I think it's really simple. If you have a primary regulator, you have clear reserves, you have made sure that you back them by cash equivalents, that creates a very much a level playing field for all different dollar-backed stablecoins.
Level playing
and then they'll
field.
really be stable.
I appreciate that. And this to me is an example of why these hearings, Madam Chairwoman, are so useful. And I feel like we really got a pretty clear path forward for one step that we can take, which is Congress should designate a regulator, at least initially the primary regulator, and task them with disclosure and auditing requirements for the stablecoin. I yield back, Madam Chair.
See, that dude is actually making progress forward,
Mr.
right?
Taylor,
He's
is now
thinking about
recognized
forward.
For 5 minutes.
Thank you, Madam Chair. Appreciate this hearing. Ms. Dixon, question for you. As you know, my home state of Texas earlier this year created a more friendlier jurisdiction for crypto and blockchain in an effort to be a leader in that space. And I saw that MoneyGram, which has many employees in my district, is headquartered right outside of my district. You've developed a partnership with them. And I was just wondering if you could go into further detail on what you're doing with MoneyGram. And for those that don't know, MoneyGram is one of the premier money transfer operations in the world. There are countries that literally 20% of their GDP is transferred in by MoneyGram. So it's a pretty important product for a lot of the world. I was wondering you to talk about what you're doing with them.
Yeah, I think that's why it's such an important part. Thank you so much for the question. An important part of what it demonstrates not just the interoperability that blockchain has with the existing financial infrastructure, but it also demonstrates that you can actually offer services to traditionally unbanked or underbanked folks all over the world leveraging this kind of technology. And finally, I think importantly from the MoneyGram standpoint and from Remitter standpoint, it provides instantaneous settlement. So they don't have IOUs out there, they actually have the money in their bank account when they're using the stablecoins, which is very important for us to be able to get right. So the MoneyGram relationship, which is in pilot right now in the United States, allows folks that you don't need to have a bank account to be able to get assets put on the blockchain. Right now, the hardest part about blockchain is the on and off ramp. We actually haven't done that exceptionally well because it's very, very hard to be able, unless you have a bank account, it's very, very hard to be able to get assets to get money into digital assets. The MoneyGram relationship could be one of many that actually demonstrates the ease of use that you can have. The beautiful thing about this is that MoneyGram, who acted very quickly in less than 2 months, was able to help to develop this technology and this integration with Stellar.
Man.
But there's one part of it, but the other part of it is all you have to have is a wallet that's Stellar enabled. So a wallet anywhere in the world. It doesn't have to be a specific wallet. To be able to then walk into MoneyGram, get assets onto the blockchain using your fiat, your local fiat. It'll convert into USDC, which is Mr. Allaire's coin. And then you can have that in your wallet. You can generate yield on that. You can do lots of other things with respect to the assets that you have. You could then send them to family in a different country, for example. And once this is global, which will be next year, you could then go into participating MoneyGram locations and have those assets converted into your local currency, which is very important. So it works very well with the cash economy and cash ecosystems. And it demonstrates the true interoperability with blockchain and the traditional financial infrastructure, because that's what MoneyGram is and has done exceptionally well. And it demonstrates the value that these traditional players bring because they've created this really important ecosystem and network of folks all over the world that have feet on the ground that really work with cash, the individuals that have cash, to be able to deliver value to them, whether that be to be able to get it from family outside of their country or just to be able to convert these into digital assets. So it's a really exciting and transformational opportunity, in my opinion, for blockchain because of the speed of use and the ease at which you can get money on and off the blockchain.
And just to follow up with my earlier statement about Texas and its role, I mean, I think all of you have testified that you have different state regulatory licensure, right? I mean, everybody here's got state licenses and multiple state licenses, right? I mean, some of you have licenses in almost every state. And so on some level, you're seeing states, sometimes referred to as the laboratories of democracy, come up with their own policy sets. Ms. Dixon, do you think that that's working? Is that effective?
I think that we actually don't have to have those licenses because we're the infrastructure, but I will tell you, working with companies that have to have that, it's complicated for them to have the individualized different licensing structures all over, but I think that folks are doing it very well. Many of the individuals on this panel have been able to be successful at getting those licenses at the state level.
I really feel like a Ripple representative should be here.
There's sort of a drive to say you're unregulated. I was actually kind of surprised reading the memo.
Anybody else feel that?
From the committee staff saying this is an unregulated industry. Do any of you feel unregulated?
I think that's an important distinction, is that the activity itself is already regulated. And I think that when we focus on activity versus focus on the technology stack, you'll see that there's already a tremendous amount of regulation here and a lot of protections, and we should just be looking for those gaps instead of actually trying to create a new regulatory framework.
Like, imagine Brad sitting in
It's
there.
funny that when I asked, are you unregulated, everybody laughed. That literally the concept, I mean, almost the memo, unfortunately, is almost laughable, at least to the people that are regulated, the people that live it every day, to say, hey, you guys are a bunch of unregulated yahoos, do whatever you want. Like, that's not the world you live in. Madam Chair, I really appreciate the opportunity for this discussion. Thank you for having us here. I yield back.
You're so welcome. Thank you. I'd like to thank our witnesses for their testimony today. Without objection, all members have 5 legislative days within which to submit additional written questions for the witnesses to the chair.
Is it finally
which
over?
will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you're able. So without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And with that, this meeting is adjourned.
Mrs. Waters. All right, there you go, folks. 3 hours later. 3 hours later. A whole breakfast later, man. A whole breakfast later. Hold on. Somebody said that the quant was pumping. That's why I brought up that chart. So now we're basically going to do whatever we want, okay? And a summary of that. That is over. Dude, somebody said, is it over already? Dude, that was 3 hours, bro. That was 3 hours. I had some good bacon, eggs, sausage, waffles, hash browns all in one, dude. Somebody said you think that was bullish. Dude, definitely. Definitely. I was very wrong. I'm going to admit right now I was very wrong. I was very wrong. I thought that some big bad headline was going to come out of that, but I was very wrong. So that was very bullish. What do you guys think? Was there progression in that? There was really no progression, though, right? It was just simple discussion. And shout out to Brian Brooks, because Brian Brooks is a goat. Oh my goodness, Brian Brooks is a goat. And we already see the memes coming out, right? We already see the memes coming out. Let's watch this one over. Hold on. Let's watch this one over. Make sure you guys subscribe as well. If you're just watching this, make sure you subscribe because you can help me hit 100K today. By the way, we're doing a $10,000 giveaway. $10,000. Like, no cap. Like, for real. Like, I'm not a capper, okay? We will give away $10,000 when we hit 100K. If we do hit it today, though, during this stream, then obviously, like, tomorrow, we'll get it popping with the giveaway, and I'll make it all happen, right? So let's just watch this clip. I want to watch this clip because this guy, I burst out laughing. Oh, my goodness. Hold on. Watch this.
Now, the number one threat to cryptocurrency is crypto. Bitcoin could be displaced by Ether, which could be displaced by Dodge, which could be displaced by Hamster Coin. And then there's Cobra Coin. And what could Mongoose Coin do to crypto coin?
Dude, what could Mongoose Coin do to crypto coin? Oh my goodness, I had to retweet that one. But yes, that was honestly pretty standard, bro. Pretty standard. That dude is funny. He's getting memed. As he was saying that, I said, like, bro, okay, this guy wants headlines for sure. This guy wants headlines for sure. So we can just do Q&A now. I've been live for 3 hours, okay? So shout out to anyone who watched the whole thing. You are an absolute goat. Make sure you drop a like on the video as well. But it is pretty standard. The market didn't even like move due to this. Maybe some headlines come out and move it a little bit, but to be honest, I was very wrong about a bad headline coming out of that. There was nothing bad about that. Brian Brooks killed that, okay? They did not discuss crypto Twitter, from what I saw. There was no crypto Twitter discussion, right? Which they said they were going to do. It was a lot of stablecoins. It was a lot of stablecoins. It was a lot of securities talk. And it was a lot of exchange regulation talk, okay? So what you need to know what came out of that was very progressive talk, actually. It was very good. It was very good. I strongly feel like there should have been a Ripple representative there. I just feel like it was unfair to have a Stellar representative. It looks like they actually like gave a middle finger to XRP and to Ripple by putting that Stellar CEO there and just setting her up with the good questions. I have no beef with Stellar. XLM is amazing, okay? XLM is amazing. I hold XLM. I literally hold XLM, but I just feel like somebody, because XRP is the one fighting for crypto regulations right now, right? So, you know, like, Delty Becker, thank you for the $2. SHX pumped in the past 2 days. Why do you know? So, I've heard of this SHX coin. This is simply a pump and dump coin. They pump this coin and then they dump it. Okay? As you can see, which is being done right here. They pump the volume into this coin, then they dump it. This is a pump and dump. Anyone talking about this is involved in that pump and dump. Okay? There's my thoughts on that. I do not like that coin. I'm sorry. So, we're here. Make sure you subscribe. Click like on the video. We can do some Q&A and stuff. Play the clip where Brooke mentions XRP. Oh, let's see if we can find it. If we can find that, let's see. Let's see. Crypto hearing XRP. See, this is one of the biggest tips. This is one of the biggest tips. Oh my, people are sharing. People were sharing. Shout out to everyone who was sharing my thing. Wow. Okay. People were sharing my thing. Look at that. But this is the biggest crypto tip right here. If you want to be first to the news, never forget that Twitter is a search engine. So if something happens, watch this, crypto hearing. You can search Twitter because usually this is where it comes up first. And now we can see memes being made of the CEO of FTX with his hair. Somebody in the chat said my hair looks like his. We both do have brown hair. We both are pale white nerds. You know what I'm saying? And we kind of do look like that. Okay, here's a good summary. We got a good summary here. See, this is how you can use it. Did we hit 100K? Rye Gerbs, thank you, bro. Congrats, 100K. Did we actually hit that? There's no way. If I refresh this, look. If I refresh this, are we going to hit it? Oh, yeah. Are we going to hit it? Let's refresh it. Oh, my goodness, bro. That definitely deserves a clap with my glove. Okay? Clap with the glove. 100K in 1 year. Appreciate all of you. I love all of you. Once again, we're doing... Wow, look at the chat right there. Damn. Look at the chat going crazy. Yes, diamond hands, man. So, we will do the $10,000 giveaway. Tonight, I'm going to set it up. There's going to be ways that you can... Aaron B., thank you for becoming a member. There's going to be ways that you can earn extra entries into the $10,000 giveaway. We're going to vote on how many winners. Like 1 winner, 2 winners, 5 winners, or 10 winners. And then obviously if we vote for 10 winners, each one will get 1,000. Or if we vote for 5 winners, each one will get 2,000. So, love all of you to death. and to more life, you know, more life. We're gonna stay live because YOLO, dude. I'm on a big live stream today. Maybe one day we could do some 24-hour lives. I don't know. But I appreciate all of you. Shout out to the OGs. I want to give a big shout out to the OGs, bro. The OGs that have actually been with me since like a long, long time, you know? There are some people who have been watching for literally... They've been watching for literally 1 year, right? I've been on YouTube for like 1 year. And shout out to the people who have been watching me for that long, bro. And shout out to the new people. Frontier. Hey, Fit Dad, bro. What's up? Fit Dad, thank you. Frontier, thank you. You were the 100,000th subscriber? No, you weren't. That's cap. You were the 100,000th subscriber, bro. That is crazy. But yes, bro. And we see Quant is pumping up right now, man. Quant is pumping up. But thank you to everyone saying congratulations. I appreciate that. Let me turn Market Cipher B on here. Wow, huge momentum wave building on Quant right there. Mark Wilson says SHX is not a dump coin. Okay, sure. I don't know much about it, but I've seen it just get pumped and dumped. In fact, at one point it actually went to 0, I'm pretty sure. Hold on. I am ignorant to this coin a little bit. But I'm pretty sure at one point it actually spiked to 0 right here. What was this? How can you explain this? This flat line, they pumped the volume. This is like a venture capital coin, I'm assuming. Just a flat line, right? Look at this. What is this, dude? This is totally manipulated. Or it's just such a small market cap, but man, I don't care about that coin. Great Oaks, you said, been here since February. Congrats. Quant and H-bar will change the world. 100%, bro. Great Oaks, I appreciate that. Since February? That is amazing. Chris Guerra says, congrats, love your videos. I appreciate you, bro. Magni, thank you for becoming a member. Yes, so 100K right there. We actually did that. See if I refresh if it's actually real. Oh, yeah, that's real. That's real. Watching you since the $40 quant days. Wow. That $40 quant days. Stronghold is a node Ponzi. Yeah, there's a lot of node Ponzi schemes out right now, for sure. There's a lot of those, bro. You got to watch out. AC, thank you for becoming a member. I appreciate that. But let's check out how the market is doing. Are we pumping off this, or are we dumping off this? NEAR, wow, NEAR is doing amazing. EOS is doing amazing. The regulated EOS. But to be honest, to give a summary, okay, let's look into what people are saying right here. Here's a good summary. I'm going to retweet this because this is a good summary for people. We had, okay, 2021 was the year of cryptocurrency. Oh, crypto Twitter was actually name dropped. Okay, crypto Twitter was actually name dropped. That's amazing. I did not know that. Let's see. Most bullish hearing I've ever seen in regards to crypto. Somebody says crypto isn't a passing fad. It's a legitimate financial tool used by millions. Overwhelmingly positive. Yeah, everyone is loving this. And this Mongoose coin is apparently mooning right now. Oh my goodness. Do we want to watch Mongoose get rug pulled here? Mongoose, man. Oh my goodness. JS, watching you since $40 quant days. Hell yes, man. I appreciate you. I appreciate you, bro. Mr. Anti-Eggman, you say keep it up. Thank you, bro. You've been a member for 3 months. Let's go. Great Oaks, you said, bro, that lady loves her lumens. LOL. Yeah, she does love her lumens, man. She does love the lumens. I feel like it's amazing to actually hit 100K on a hearing day like this. Like, that is amazing to hit it on a hearing day. That's pretty cool. I always hit these milestones. Like, when I hit 50K on YouTube, H-bar was just crossing 50 cents. And H-bar was like the first gem I presented at 3 cents on this channel. Many of us got into H-bar at 3 to 10 cents. Also, I was looking at helium at $1.50 on there. Madison, thank you for becoming a master member. Hams, you said everyone losing hope on XRP makes me more bullish. To be honest, it makes me more bullish too. The longer that a coin consolidates and coils up like that, the bigger that explosion is going to be when it really blasts off, right? Especially with an asset like XRP. It's very simple things. Chuck Nasty, thank you. Appreciate that. Let's watch this, though. Hold on.
Now,
oh, yeah, we just watched this. He mentioned Mongoose Coin. How do we find Mongoose Coin? Do I have to go on PooCoin? Do I have to go on PooCoin charts? I think I got to. Been watching since the walking videos. Hell yeah. Billy, thank you. Andrew. Oh, yeah, Andrew. I see you with that, dude. Yogurt Monster. Big pause on that, bro. Big pause on that, Yogurt Monster. Let's check out if we can see Mongoose Coin here. And see, like, where is this? Where's the Mongoose Coin, bro? Because I want to see if this is actually, like, doing something. MONG. This is going to rug pull, dude. This is probably going to rug pull, bro. Where's a link to, like, the coin? The coin's not even on there, man. So it's funny. It is funny that we have a whole entire hearing on regulation and unregistered securities, and then they actually make a Mongoose coin because somebody mentioned Mongoose. That is funny to me, bro. Akash, thank you for becoming a member right there. Appreciate you. A congressman mentions Mongoose, and they immediately make a Mongoose unregistered security coin. Very funny. Let's see what else people are saying here. Oh, this was the first time Congress has had a full hearing on crypto. They said it's not the Wild West. It's already regulated. Okay. It's already regulated. Then let us keep going with no intervention. Mappa, congrats. You got me into H-bar. Your hair is crazy. Well, thank you. My hair is crazy because I haven't showered yet. I got up and immediately went live for this. I have not showered. So I have not showered yet. That's why my hair is crazy, and that's why I have a hat on. Thank you, though. Hiwo, thank you for becoming a member. Is Zada a scam? Chris, thank you. John, XRP is pumping for real? Are we serious? It did get a mention there. What's happening to Stellar, though? I'm wondering. Oh, yeah. 81 to 88. I like that. Dene, I'll check out Zada, by the way. Dene, thank you for becoming a member. Should I buy more H-bar right now at 27 cents? Hey, there are people that would tell you that buying H-bar anywhere below 30 cents is the smartest move ever. That's what people would tell you. Am I going to tell you that? I can't tell you nothing, bro. I can't tell you anything. Because it's up to you to make the decision. Do you like H-bar enough to hold it until it's $1 and get a 3x return on your investment? Are you the voice of bearable bull? Moving on. Paulo Garcia, thank you for becoming a member. Two Tone says, what am I buying? Dude, to be honest, Stellar might actually pump. Stellar might for real pump off those news if it isn't already. Oh yeah, it kind of is. You know? No, not really. Let's just go to here. Look at this. Man, Stellar is like... Stellar and XRP just don't move, man. So crazy. Everyone's saying congrats on 100K. I appreciate you. Hell yeah. We will be here forever, bro. We'll be here forever. You're here since my Ripple and Elrond decodes. Nice. The Elrond. I can't wait to get the $10,000 giveaway going. I can't wait to get the $10,000 giveaway going. We're going to do the $10,000 giveaway. I literally have $10,000 in USDT waiting to give away to you guys. And we'll do the giveaway. It's going to be a great giveaway. And more details will be in tomorrow's video. More details. So tomorrow, The daily market update tomorrow is the most important thing to be watching because that will have the giveaway in it. Somebody said, what do the white and blue lines mean on Market Cipher? So these white and blue lines, right? This is a combination of 8 moving averages right here. 8 EMAs, okay? These white lines are a combination of 8 EMAs. So if we go to the daily chart, take a look at this. Let me clear off some of my drawings. You can see that when the lines get white and blue and like defined, right? White and blue, that means it's a bullish trend. There's a bullish trend going on. When you see the lines get into the gray, right? When they get into the gray and wide, then we're in a bearish trend. So you can see that clearly right here, right? Anybody who's using Market Cipher, you're also supposed to use it with Heikin Ashi candles, right? So we can see, like, where's the lines right now? See, we're expanding the EMAs right here. Circle what I'm looking at. Right here, you can see these are like coming out like this, right? They're getting wider. So that is indicative of that we're in a bearish sort of trend right here, right? You can identify the trends based on naked price action, absolutely. This is just a helpful visualizer. And it definitely helps. Like, you could see this one converging right here, right? You can see this one converging, and clearly we were about to enter a bearish trend, because this would all be cut off. Just imagine this was not here. You could see these lines converging, and you would have been like, oh my goodness, this is probably going to turn a little bit bearish right here. So, you followed me on Twitter. Yeah, shout out to anyone who's following on Twitter as well. Oh my goodness. Don't be doing... Man, I am so bad at live streaming, man. I'd be clicking random stuff. Yeah, make sure you all follow me on Twitter. We also just hit 60,000 on Twitter. So I usually do giveaways every time we go up 10,000 followers. Here's my username on Twitter. Also, follow me on Instagram as well. If you guys want to get a more personal view of me, make sure you follow on IG right there and Twitter right there. But we usually would do a $600 giveaway because we hit 60K on Twitter. But we're just going to wrap that into the $10,000 giveaway. Dude, if you complain about that, something's wrong with you. If you're like, Mason, you need to give away $10,000 and $600 because you hit... Yeah, man, shut up, bro. I'm giving away $10,000, bro. Okay. You really love my aggressively average content? Oh my goodness. Yes, Alt Mom just put the Twitter in the chat. Oh my. Yogurt Monster, bro, you're a troll, bro. Damn, I'm really full off those waffles and hash browns and eggs and bacon and sausage all in one. Am I from Toronto? No. Okay, but we're gonna wrap this up because I've literally been live. Like, look at this. This past live was 1 hour and 55 minutes, and this one is already 1 hour and 37 minutes. So we're legitimately freaking been live for a long time. And I do plan to go live on TikTok later tonight and talk to the TikTok people. Xavier, thank you for becoming a member. How did I like that lady promoting Stellar hard? It made me feel off, dude. It made me feel weird that she was promoting Stellar that hard. But I guess she was just answering the questions. Like, everyone else was talking about their companies. I guess FTX, the CEO of FTX, they do have a coin, right? I do recommend buying FTT. FTT, this coin is going to do great. Oh, yeah. This coin is probably going to do great. We know that FTX and Coinbase are the chosen ones, absolutely. So we know, like, I'm a fan of FTX for sure. Somebody said, "Hey Mason, do you feel regulated?" Oh man, Jack. Oh my, Jack. I'm not gonna say your full name, but thank you. Been watching since 50 Australian dollar quant days. Shout out from Australia. Oh, I like that with the quant, dude. QAUNT. I like that. AU. Shout out Australia. I have so many beautiful people from Australia subscribed. It's so many. If I go to my TikTok analytics, it is so many beautiful people from Australia. But we're gonna wrap up the stream. Once again, make sure you follow me on Twitter right here. Instagram is the same name right there, and Twitter's right here. Okay. Also, you can go to my Twitter, click this link in my bio. It's going to take you to here. If you want to buy Market Cipher, which is this indicator that I use on my videos, you can buy it right here. Start trading with Market Cipher. You can also get a Ledger Nano X. All of those links are referral links, so they do support me. I appreciate you. But if you want your crypto taxes done pretty easily, I have a TaxBit link right there. But I appreciate all of you. Thank you for 100K. Make sure you drop a like on the video, like Alt Mom is saying in the chat. I definitely realized that I need more moderators, probably. Because we got... As soon as I was getting my food... Look what I got. This food. As soon as I was getting my food, there was like bots that came in. Did you guys see that? The Pomeranian Metaverse? Ew. What the heck was that? Pomeranian Metaverse? Like the Pomeranian dogs or something? They spammed the entire chat. And I was like, I just gave up and went and got my food. What time on TikTok? Probably like 6 p.m. PST or 5 p.m. PST, something like that. But yeah, it's hard for me to block. It's hard for me to block. It's hard for me to block people in the comments. Dude, you guys know how much stuff I was trying to do? I was trying to pay attention to the hearing. I was trying to eat my good-ass bacon and waffles and eggs. And I was trying to pay attention to chat. I was trying to ban people in the chat. I was trying to tweet out my link on Twitter. But I appreciate all of you. Thank you for 100K. I'm gonna make the 10K giveaway tonight. There's gonna be a couple ways that you can get extra entries. I'm excited to do an official giveaway like this, where you can actually like do a task and earn entries, right? But I appreciate all of you. This live stream will be kept up if you want to watch the rest. If you want to be a moderator, just DM me on Instagram or Twitter. I'll probably get 1 million DMs from that. I'm sorry. So don't be mad if I'm not responding. But thank you all. I love every single one of you. Yes, the winner will be randomly selected for the giveaway, of course. Of course. True randomness. But thank you all. Diamond hands. And that's all. Follow the Twitter, Instagram. The Telegram link is right down there. And goodbye, folks. Appreciate all of you.